What's up guys, TradrNate here. Welcome to another video. In this one we'll be going over options flow, just a quick intro to it, what it is, and how I personally use it. So the basis behind it is options flow is just a way to track large options trades. These can be placed by other traders, different institutions, or whoever trades in large size. It's a way to see what big money is doing and how they are positioning. Some important aspects of options flow are the size, which is how much they're using, the spot, which is what the ticker was trading at the time that the option was open, the price, that is the price that they paid for the option, the IV, that's the implied volatility of the option, time, what time they made the trade, the order type, whether that's sweep, block, or split, we'll get into that a bit more later, and the side of the trade, whether it's bid side, below bid, ask side, above ask, etc. And an important thing is what it is not. It is not a guarantee for future moves. Just because you see large flow coming in does not mean that price will have to follow that. It does not mean that there is a guarantee that the trade will make money. And it is not even a guaranteed directional bias. You don't know how they are fully positioned. You don't know whether or not it is a hedge for a different side of the trade, whether they hold a bunch of commons and they're positioning through options to hedge those commons. So those are important to reminder. So here is an example of flow. I personally use WhaleStream. So this is a screenshot of the WhaleStream web browser. So we see here that on October 24th at approximately 1:57 p.m. somebody traded Tesla $200 call options with the expiry date of October 28th. They in total put in $185,000 into this trade, and the spot price was 211, so they were below that, so these were in the money calls. This was the size that they were using, so they purchased 136 contracts at a price of $13.65. And then here we have the side of the trade, so this was towards the ask, which we see here the ask is at $13.70, so we were just below that, so it was towards that. And again, we see that it's in the money, and that a few other things here, such as the order type was a sweep, which we'll get into a bit later. So for order types, we have block, which are a single large purchase on a single exchange that is oftentimes pre-negotiated off the public market. I like to think of these as not very aggressive. They're quite picky with price. They wanted a specific price that they're pre-negotiating. So I kind of think of this similar to a limit order where you want to enter or exit at a specific price. And then next is a sweep. This is an order that is split into multiple individual orders, which are spread across multiple different exchanges. And these are used to enter as fast as possible. Think like most aggressive, like a market order. You want to get in as soon as possible. You want to get in right at that moment. Lastly, we have the split, which is an order split into multiple individual orders, similar to a sweep, but it's only on one exchange, similar to a block. So these are more aggressive than blocks because they are split into multiple individual orders. So they want to get filled a little bit faster, but they're less aggressive than sweeps because they're still only on one exchange. They're not across multiple exchanges looking to get filled as fast as possible. And then here again, we just have examples of what these look like on the WhaleStream platform. You see the sweep are yellow or gold. Block is a little bit of a purple color, whereas a split is blue. So for flow traded towards, at, or above the ask, these are hinting towards buying puts or calls. However, this is not always true. You also need to look at price, spot, time, and IV. So on a large buy, you want to expect to see IV increasing, whether they're calls or puts, you should still see the IV increasing. You want to see that contract price increasing if there's multiple orders as well. So say they're buying at $1 a contract, you want to see it increasing to $1.05, $1.10, whatever. You want to see that increasing, showing that the contract prices are moving up, which again hints towards buying. And again, you want to see that spot increasing, that's for calls, or decreasing for puts. Then also if you see options traded close together in a very brief time frame, these are hinting towards a single buyer. The reason why you want to look at things like IV, contract price, etc. is because sometimes you'll see lots of ask side flow coming in, and then you'll see a little bit of bid side mixed in with it or towards bid. This is not necessarily somebody just instantly getting in and out. If you're seeing that, yeah, some of them are starting to trade towards the bid, but that IV is increasing and the contract prices are increasing, that could still be hinting at a buyer just continuously getting in. So those are important things to remember as well. It's not as simple as this is traded at the ask, it's guaranteed to be a buy. There's other things to look at as well. Above the ask indicates more aggressive buying, whereas towards the ask is the least aggressive. So when somebody's trading at above the ask, they're getting in at a premium. Getting in towards the ask, they're getting in between the bid and the ask, but it is still closer to the ask, but they're not paying a premium like the people who are trading above the ask. So the above the ask sweeps, especially when there are more than one order with increasing prices, is the most aggressive. Those are what I like looking for, is people continuously sweeping above the ask in a short period of time, showing that they want to get in as fast as possible. They don't really care what the price is at. If the price is increasing, they're still getting in. And it's also important to remember, it's one of my favorite things about the WhaleStream platform, is being able to see previous flow for the certain contracts. Just because you're seeing something being traded at the ask, everything's hinting towards buying. This isn't necessarily them opening a new position. This could also be someone closing a previously sell to open order, which we'll show in a little bit what those look like. So these are shown in order of decreasing size. So we start with the 7.25 million, 6.62 million, etc. But if you look at the times, this largest order was open first at 2:51 p.m. We see that they originally got in at 6:55 above the ask, and yes, they're all sweeps. And the IV on these contracts were 25.02. Next, we have these next ones, the 6.62 million. Again, same contract. The spot price is lower. They're paying a higher amount as IV is also increasing. So this is showing that they're still wanting to get in. They're paying higher price. And then the next ones are these bottom ones, the 2.56 million. Again, they're still increasing prices. They're up from 6.62 in the last order to 6.66. And yet again, we're seeing that IV increasing 25.09%. So this is still hinting at single buyer, because they're pushing that IV up as they use more size. The IV in the contracts increases. And then finally, this last one, the 2.8 million at 2:52 p.m. These were traded at 673. This one was just ask side. It wasn't above ask, but still they're paying a higher price than the last time. So they're still increasing. They're still getting in at higher prices than the previous times. And again, that IV continuously increasing. What started at 25.02% is now 25.15%. So that's again hinting at somebody buying these contracts, as we have the contract price increasing along with that IV. And so on the flip side, we have just one order of SQQQ. The September 23rd calls at the 35 strike. So these were trading at 44.30. That was the spot price. So these are in the money, which you see the little tag here that WhaleStream produces. And these were traded towards the ask. As you see, the 9.59 contract price was just under the ask price of 9.60. And then again, IV at the 110.97%, just a single order. So we can't tell whether or not the IV was increasing because of this. But one thing I like looking for is this written symbol here. That means that new contracts were needed to be written in order for this trade to be placed, along with the quantity over open interest and daily volume over open interest. These are hinting towards a more aggressive call, as it'll be a lot harder for them to get out of it because their contract is greater than the open interest available. Now on the flip side, flow traded towards, at, or below the bid. These are hinting towards selling puts, but again, you need to look at things like IV, spot, time, the price of the contract. So on a large sell, expect to see IV decreasing. That's for both calls and puts. Contract price decreasing for calls and puts, and spot price decreasing for calls and increasing for puts. But these two, the IV decreasing and the contract price decreasing, are the most important things to look for. As large orders start pulling out, you have things like IV and contract price starting to slide down with that. And then again, same as we saw with the ask side flow, the time close together indicates a single seller. So below the bid indicates more aggressive buying. Towards the bid is least aggressive. Same thing we saw with ask side flow. And again, it's important to look at historical flow, as these could be sell to open positions, such as like sold puts are bullish and sold calls are bearish. So just think opposite of normal. But if you do see similar trades that were placed previously, then these are likely closing out those orders. So for examples, we have Apple December 16th, 140 calls. So we see here that these were hinting at sold. This was provided by WhaleStream. We see that these are traded below bid, except for this one was towards the bid. And this time we didn't have it sorted by total cost. We had it in time. So these ones were open first, these ones were last. So what we see here is originally we have the 1286 was the original contract price that these were traded at, with an IV of 40.36%. And then the next ones coming in were traded at 12.8. So we saw that contract decrease and a drop to 40.16%. So the IVs decreasing as well. Next one, 12.71, another decrease, 40.1%, again, decreasing in IV. And then finally the 12.63 and the 39.8%, both of those decreasing as well. And you see these coming in right after each other. So you're thinking that that is the same person who are selling these contracts. And again, here we have that written symbol showing that new contracts need to be written for this trade to be opened. So that is again hinting towards that these were sold to open and not selling an already open position. These were bearish calls that were being sold. And again, you could look up historical flow like WhaleStream allows, showing that nothing close to this size was already open. So these were opening positions. And then down here we have SQQQ. So these were the same as the last example, the September 23rd $35 calls, except this time they were towards the bid and hinting towards selling. So these were not a sell to open position like Apple, where these were a new position that were being opened and they were bearish calls. This was not a bearish call. This was just a closing of the already open position like we saw in the example for the ask side flow. So some things I like looking for with flow is the same strike and expiration repeating flow, close time frames, which is indicating the same buyer and seller like we saw in some of those examples. Sweeps above the ask or below the bid, these are showing aggression, again like we saw in some of the examples. And contract prices increasing on the repeating orders for long positions shows buyers are accepting higher prices to get into the position. This is what we saw in the SPY opening put position on the ask side flow example. And then contract prices decreasing on repeating orders for short positions. That's like we saw with the Apple bearish calls that were being sold to open. This shows that the seller are accepting to sell for less to get out of or to open a sell to open position. IV increasing / decreasing on repeat orders. So IV increasing on the ask side flow, showing that the person is trying to get into the trade, or that IV is decreasing on repeat orders, showing that they are likely sold either to open or closing positions. And then lastly, volume over open interest. This will make it harder for the buyer to seller to get out of the position. This hints towards them being confident in the position and a bit more aggressive, as they're more focused on getting into the position than how they're going to get out of it. So some other important things, like I mentioned in the past, written contracts, like you see that little written tag on WhaleStream. This shows that they required new written contracts to fill those orders, like I already previously mentioned. Quantity over open interest, again, like some of the examples I showed. And reviewing old flow. I mentioned a few times reviewing that old flow is important to see whether it is a new opening position or if it is closing an already existing position. So some last thoughts. It is not always clear the intent behind flow, whether it's a directional bias, a hedge, or what it is. So that's why it's always important to keep that risk management in check, as you aren't sure whether or not it is them making a directional bet against a stock moving up or down, or if it is a hedge for an already open position, whether that's commons or a bigger options trade. Smart money is not always right. There's a lot of things going around social media like follow the smart money, whereas yes, they have a lot of the time more information than most retail traders. It does not mean that they cannot be wrong. So again, having that risk management in check for when trades do not work out, and not just letting all of these options orders go to zero. Having a plan for whether it's a chart or a certain percentage point, having an exit plan before opening the trade is always important. And not all flow is the same. A lot of it is noise, so it takes a lot of time to both understand flow and sort through all of that noise. So that's the end of the video. Thanks everybody for watching who stayed to the end. If you enjoyed it, if you learned something from it, don't forget to leave a like and subscribe to the channel. If you have any questions, if something wasn't clear, feel free to leave questions or comments in the comments below, or reach out to me on Twitter at TradrNate. If anyone is interested in WhaleStream and want to sign up, feel free to use the discount code TradrNate. That'll get you $10 off on monthly subscriptions or $100 off annual subscriptions. Hope everyone is continuing to navigate these markets that we're in right now, and I hope you all have a great rest of the week. Bye for now.